Hello traders, this is David. One of the things I love about the wave trader technique that I've been using to trade is the fact that whether you are in a trending situation or in a counter trend situation, it helps you to find trades. Formerly, I used to be very averse to taking counter trend trades, but now I think I even rather prefer them because they are very consistent. So I'm going to show you about 4 currency pairs I took trades on Friday. That was the 4th of October, and it was the end of the trading day. The markets were getting ready to close, so I had a look at my charts and I took these trades, and they are counter trend trades mostly. So I want to show you what I was thinking and why I took them. So right now I'm on the New Zealand USD, the monthly chart, and I want to show you what I saw. So I know I know that the trend is down, okay, but what is happening here is a series of bounces, okay. From where the trend began to go down, you can see that it kept bouncing up and up and up, and if we were to take retracements of these points, you will see that the 55% retracement technique would have worked perfectly well even on the monthly chart. So where we are currently, you can see that it has begun another bounce. Now we have a wave top situation here. MACD is crossed and trending down, good angle and separation, okay. So that tells you that this trend is down, but you cannot stop these upswings. You can't stop these bounces, okay. Or if it's in an uptrend, then it will be a rally, but in a downtrend it's a bounce or a dip. So you can't stop them, and that is what I saw, and I decided I was going to trade. So this is the monthly chart. Let's go down to the weekly, and you can see here on the weekly that the bounce has begun. We have a hammer bar here, okay, which I believe it's a precursor to this trend changing direction in the short term to the upside. So if we take retracement value from this point all the way to this point here, then our 50% retracement of this move should be somewhere in this region, right? Now, will it get to that place? I don't know. But what I do know is right now we are in a bounce, okay? So let's go to the daily chart and look at what we see. Now, on the daily chart, what do I see? Well, I see positive divergence to price of the MACD. And if I were to draw the line, you will see it as well. So by drawing these lines like so, it helps you to see if there is divergence. So this is positive divergence of the MACD to price, and it's also a sign that the trend is about to change. So if we were to consider it that way, then I believe that this upward move will go for a while, possibly to the 55% region. But even if it doesn't go there, and you want to argue the point that let's use this point instead, then this is what we will get. So from here all the way to this spot, you can see that the 50% level, or 55 rather, will be somewhere here, okay. From that place to where the market is currently is about 38 pips. Now that is in a normal situation that will be bad, but because you understand the principle of this retracement, that's not so bad for you, at least for a short-term trade. But the trade I took on this pair is not even a buy trade. I actually sold. So you can see how confident I am in the technique. For me to sell, even though everything points to this move going up, and I'm going to show you why. Now, this is the daily chart, okay. So on the daily chart with the week ended, you can see that right now we have what you can call a hammer bar, okay. So even though everything is pointing to this move going up, let's go to the 4-hour chart and see. Now do you see why I took this trade? I took this trade because of what I understood about the 55% retracement. So even though I believe that it's going to go up a ways to the 55% retracement on the weekly chart or the monthly, but you can see what's going on here on the 4-hour chart. We have We still have the positive divergence here as well. I can show you that from here to here, and then from here to here as well. So divergence back to back is very powerful. Okay, so we have that. And usually when this occurs, I told you that in a previous video, I told you that when divergence occurs, usually a wave bottom or a wave top will follow. So you can see a wave bottom situation here. So if we were to take our price target levels on that, okay, let me just clear this up so that we can see it properly. I'm trying to teach you guys how to make trades without being afraid, so that you will gain confidence in your own abilities to see trades. The market moves up, it moves down. There is no reason why you cannot make profit while it's going up and then while it's going down. You should be able to make profits in an uptrend or a downtrend, provided you can find a trend. So don't be stuck in a certain mindset. For instance, you believe that because the trend is up, there's no reason why you should take a sell trade. No. If you see an opportunity to take a sell trade in an uptrend, you take it. And this is one of the examples. So you can see here that we have a wave bottom situation. So if we were to use the APAC and get our price target levels, you can see that this is the third wave we're in right now, okay? And then it's now beginning to go down in a fourth wave. So we have price targets up to this level. So right now, what I saw yesterday was the beginning of this fourth wave move. So I went lower. I went to the 1 hour chart to have a look. Okay. So as at the time when I came to the 1 hour chart, the market was on this long red candle right here. Can you see that? That was where the market was. Okay. And again, you can see we have, if I can just show you guys, what do you think this is? This is divergence again. Okay. And now this is negative divergence. So now we have first wave, second wave. This whole thing is the third wave. Where do you think the fourth wave is going to go? Your guess is as good as mine. It's going to go down most likely to the 55% retracement. So where do you think that I placed my profit target here? I'm going to show you where I placed it. So by taking the levels on this third wave, guess what? See? So I placed my price target exactly or just shy of the 55%. So now what I'm trying to say is that in the short term, if we were to look at the daily chart, we have positive divergence here, right? And I believe that this move is going to go up for a while. Most likely it might get as high as somewhere here, but that we don't know. But right now what is going on is it's in an uptrend. Okay. But if we go to the 4 hour and the 1 hour chart, you can see what's going on here. We have what is called a retracement. So it's this retracement that I decided to trade, okay? And like I always tell you, if you are a beginner, please do not attempt this on your live account, but you can practice on your demo account until you get a hang of it. So what I'm trading right now is the fourth wave. And in order for you to fully understand this, you have to have a good understanding of the Elliott wave principle, and you have to understand how the waves work. Because if you don't understand that, you would not know where you are on the chart. So, but because I have an understanding of the waves, I know that this is the fourth wave. So I took this trade yesterday. Okay, I used the market order. I didn't bother with a micro lot, and I didn't try to go in on a bounce, because if I had done so, let's go down to the 15-minute and I want to show you something. So if this was where the market was when I entered, you can see where I entered here. Okay, and you can see that the market moved down and then bounced right back up. Okay, creating this wave top situation here. So that means if I had chosen not to go in with what do you call it, with an entry order, I mean a market order, and I decided to go in with an entry order, I would have waited patiently for this retracement to begin. Then I would have taken this value from here to this point, and I would have placed my entry order here, okay, at the 55%. So that means this bounce up would have taken me in. I would have had some drawdown, and then all this would have been profit. But it doesn't make any difference, because you can see that where I entered, and where I would have entered with an entry order are almost the same. So right now I'm in profit. Now I don't know what's going to happen by Monday, but I'm hoping that this move will go down at least up to this level here, okay? Or at the very least, I may be able to take it at the third the third target if I can get that far. So the third, the first, the third, one of them, one of these three. So that's on the New Zealand card, Canadian currency. So let's go to the British pound. Sorry, this is the New Zealand USD, okay, not the New Zealand card. I apologize. So now this is the British pound USD, and I took a trade here as well, okay. So this is the monthly chart, and you can see what's been going on, okay. So here we have this move down with a bounce, and then we had another move down. So we are in the process of another bounce. So I decided, I saw this on the daily chart, so I came to the monthly chart and I decided to analyze it and do a top down. So what I can see right now is that we are in a bounce. This move is still going down, okay, but this is a bounce. So let's go to the weekly chart and see. So now on the weekly chart we have this wave top situation here, first wave, second wave, third wave. Now this is the fourth, okay. And then if we go lower to this, let's go lower again. Let me go to the daily chart and show you what I'm trying to say. Now on the daily chart we have this move starting up here again. So what I believe is that this move on the weekly chart is not done going up yet. I believe that it still has potential to go up to this dotted line. This dotted line is the 55% retracement of this rundown in price. That's what I believe, okay. So even though the overall trend is down, I believe that the market still has potential to push up to that place. And you can see on the weekly chart that we have a spinning top situation here, which is also a reversal candlestick, okay. So this move down, if I were to take this level from here, you can see that this move stopped just shy of the 62%. That means our 55% entry technique would have worked if we had seen this. Let's go to the daily chart so you can see what I'm saying properly. This is what I'm saying. Do you see that this move, when it retraced, it got to the 55% and reversed there? So it is this reversal that I saw, okay. So when I saw this reversal, I now decided that even though the overall trend is down on the monthly, I'm still going to try for a buy trade here, okay. So I began to look for an entry point. So I went on the 4-hour chart. This is what I saw. So I saw this wave bottom situation here. We have wave 1, 2, this whole thing here is 3, and we have the 4th wave. So I'm still believing for a 5th wave, okay. So even if for any reason at all the market decides it's going to turn, because this move could easily be the beginning of the downward move again, and we have wave 1 here, 2, 3. So we can call this whole thing 4, but you can also be objective and look at it and say wave 1, 2, 3, 4. So I believe that there's still one more run up in price, okay. My profit target is ambitious, about 214 pips, okay. I don't really know if it's going to get there, but at least I saw this move and I entered, okay. So let me go to the 1-hour chart and show you. So it was on the 1-hour chart I took this trade yesterday. As at the time I saw this chart, the market was hovering somewhere in this region. So what I did was I did this, okay. And the reason why I'm taking it from this point instead of this point is because I'm using here as my first wave, second, just like this was the first wave and this was the second, okay. So I took here as my first, I took here as my second, and this as my third. So that is why I'm using this point. So you can see here that the 55% retracement is just where the market is currently, okay. By the way, today is Saturday, so the market is quiet. There's nothing going on. I'm only using today to analyze the charts, the trades I took yesterday. So I saw this yesterday, and as at the time I saw it, the market had blown past the 55% retracement, so I did not bother with an entry order again. Okay, so I saw this going down and I waited for it to begin to bounce back up, and when it began to bounce back up, I went in with a market order. As you can see, I bought one standard lot, and so currently I'm in profit. So what will happen on Monday, we will see. But I believe that there's still a little potential upward here, and it doesn't really matter if it doesn't get to my profit target. Even if I can get 20-30 pips out of this, it's still a successful trade. Okay, so now let's have a look at the New Zealand card. So this is the New Zealand Canadian pair, and I'm on the weekly chart. So let's go to the monthly and see what we see. So on the monthly chart, you can see what's been going on. The market has been trending down all of this year. Okay, strong downtrend. So what is going on here, I believe, is just a bounce, just like we've been having these bounces in the past few years. In 2017, we had this bounce. Okay, in 2018, we had this bounce as well, and now this is 2019. So I believe that this bounce is precursor to the New Zealand card going up. Okay, so what we have here is a sort of quasi railroad tracks, because we have an inverted hammer bar here, and we have what looks like a spinning top. Okay, so these two combined can make a sort of quasi railroad tracks or tweezers. So anyway, let's go to the weekly chart. So on the weekly chart, you can see we have this inverted hammer here. Even though MACD is trending down, I believe that we are in a bounce. Okay, and you can see that it keeps doing that, the bounce. So this is a bounce. Okay, so let's go to the daily chart. Now on the daily chart, what do you see? On the daily chart, what do you see? Well, for me, this is what I see. I see positive divergence beginning to occur, and this is it from here to here, and from here to here as well. So we have, and usually you can see another example of positive divergence here. Whenever you have divergence of MACD to price, usually the market will respect that and give a bounce. Okay, so now has this bounce finished? That we are not sure of. Okay, so I believe that there's still potential for the bounce to go a little bit up, but usually what happens is that whenever this occurs, whenever a divergence situation like this occurs, there's usually a retracement again. The market will always seek to go back to where it came from before resuming the direction of that divergent move, and that is what I was counting on when I took this trade. So let's go to the 4-hour chart. So on the 4-hour chart, this is what is going on right now. Okay, so I saw this move, and you can see another divergence here, and I told you divergence back to back is very powerful. So we have another example of positive divergence of MACD to price here. Okay, so and that is what pushed this market up. Okay, and I believe that there's still potential for it to go up, but what I saw, what I wanted to trade was the counter trend trade, not even the trend trade. Okay, so I went to the 1-hour chart, and this is what's going on here right now. What do you see here? We still have another example of divergence here. I'm talking about divergence a lot, but that is not really my focus, but I just want to show you that these things happen, and if you can see them, you take advantage of them. There's nothing wrong with taking advantage of something that you know. So now this is negative divergence of MACD to price. Okay, here we have positive divergence, right? Now we have a third issue of divergence here on the 1-hour chart, a positive one that pushed the market up here, and then we have this negative divergence. So now you can see first wave, second wave. Okay, this whole thing can be third, fourth, and fifth, and at the same time this entire move can be the third wave. So now I'm looking at this entire move as a third wave. So now we are in the fourth. Okay, so where do you think I placed my profit target? If we were to take our level from here all the way to the top, where do you think I placed? See, exactly at the 55%. So now you begin to understand why the 55% entry technique is so important to me, because Even though this is a counter trend move, I'm not afraid to take it because I know where the market wants to go to. So at or there about that region, the market should give us another wave bottom situation, and then we can still ride this move up if the market decides it wants to go up. Okay, so that's the advantage of this entry technique. Now we have one more currency pair to look at. So this is the Aussie JPY, Australian dollar Japanese yen pair. So this is, I'm on the daily chart right now, but let's go to the monthly chart and look. So on the monthly chart, you can see that it's been in a consistent downtrend. Okay, so what we have here is a bounce, even though the trend is down. So there's nothing much to see after that. Let's go down to the weekly chart. Okay, so now this is the weekly chart. What do you see? Well, the market has been in a very strong downtrend. Okay, this down move was, we had a bounce, which if we had plotted our retracement levels would have given us good entry point here. Again, of course, you would have entered somewhere here. That's if you're a long-term investor. You would have had some drawdown and then you have all these move as profit. So right now the bounce has finished on the weekly chart, and now we are resuming the downward move. Okay, so let's go to the daily chart and see. So now it's still in a downtrend, but look at what's going on here. Okay, this move down, we are having the retracement of this move down, a bounce. So what do you think I did? Let me go to the 4-hour chart and show you. So what I did is, from the 4-hour chart, because this entire thing is going down, so I did this. Okay, I took the retracement value from this tip, and then my profit target is set to the 55% of retracement of this move. Now you may think that it's going to turn at any moment. You may be correct, but look at something going on here. I want to show you something. Do you see that we have a wave bottom situation here? We have MACD crossing here. We have this EMA cross as well, signified by this arrow. Let me go to the 1-hour chart and you can see it properly. So you now see that we have a wave bottom situation, and this whole thing is still the third wave. Okay, possibly we are in the fourth wave right now, and that is why we're having this dithering here. So this is a counter trend trade, and it's not really advisable if you are new, but you understand now that because of what I know about the 55% entry technique, I'm no longer afraid of taking counter trend trades because I know what the market is doing. And once you understand what the market is doing, half of the battle is won. So I placed my profit target here. It's not much. Okay, it's just about 226 pips, which will give me about $248 if it goes in my favor. But that's okay. Even if I were to lose this trade, it's still okay, considering that when the trend eventually turns around, I'm still going to get into that. So guys, this is my take on the 4 currency pairs, and so far the New Zealand and British pound USD, they are in my favor. Okay, the NZD card is I still have minus $30 against me, even though it's going in my direction, and in this one I'm in negative I think about 3 or 4 pips or so. So what will happen on Monday will determine whether my deductions were correct, and I will make follow-up videos to let you guys know. So thank you very much and have a happy weekend.